Hello guys, welcome back to my YouTube channel. Today we are diving into a very interesting topic and a very interesting strategy at that. CRT, Candle Range Theory. Today I will show you a concept called CRT and it will help you to time the market better. Okay, so basically CRT is a strategy that deals with seeing each candle as a range: accumulation, manipulation, and distribution. One candle serves as the accumulation, the second candle serves as the manipulation, and the third one as a distribution candle. So before we dive into the chart, I want to explain what a CRT is. CRT is the short for Candle Range Theory, and it is a trading concept that deals with seeing each candle as a range, being that every candle has its own open, high, low, and close, or open, low, high, and closed. This candle would act as the accumulation phase of a price distribution, or the accumulation phase of a price distribution leg. So I will give you an example using this bearish continuation pattern. Remember that price delivery theory starts with accumulation, where smart money makes equal highs and equal lows before a manipulation of the leg of either the low or the high, but in this case is the low that I manipulated here. Price goes high and retests the resistance that was turned as support and starts going up, right? So this phase is the manipulation phase, and that is what this candle right here is representing. So the first candle of each example, the high and the low, depicts the high here and the low of a would-be manipulation. Now the manipulation leg. The manipulation leg is visible in a bullish reversal or a bearish reversal. So you can see that once price closes below the low of this candle, price continues to go up as a distribution for this three candle phase. Okay, now these are the four scenarios with which you can trade CRT. I will show you example in a real chart, but for now I want you to get the concept clear. Let me go over to a continuation example. Now, being that this candle has a high and a low, we are waited for price to close above this candle, and once price closes above here, we look for an entry on the wick of this candle right here, of the first candle. Usually there is a fair value gap that is formed right here, which acts as a confluence for price to tap into and continue upward. The reverse is the case for a bearish scenario. As you can see, we have our accumulation as candle number 1, and once price closes below the low of this first candle range, this is our CRT candle, once price closes below, we target to enter for a short position on the low of that wick. So this is our candle range. Our CRT range is the first candle. So the first thing you would do is to mark out the low and the high of a candle first. Okay, and CRT works better on the 1 hour chart. On the 4 hours, I usually use my candle range of 4 hours chart combined with time, and the time is 5 a.m. New York time. The 4 hour candle of the 5 a.m. New York time is what I use as the first candle range, and I expect this candle to be taken out, and I expect a CRT to form on the high and low of this candle at a particular time, and that time is 9 a.m. to 10:30 a.m. New York time. That is the precise time I come to my chart to look for a CRT and either a bullish or bearish reversal or a bullish or bearish continuation. So basically, these are the types of CRT setups: bearish continuation, bearish reversal, bullish, this is the bullish reversal, bearish reversal, and this is a bullish continuation. And I will show you a full example for these setups when I am done illustrating the structure for you. So, common mistake traders make when they are trading CRT is that they trade CRT in a choppy market. CRT does not work in a choppy market. It does not work in a choppy market. Another mistake traders make is that they ignore higher time frame bias. Remember, higher time frame CRT is what frames a lower time frame CRT entry. So you want your CRT candle to be the 5 a.m. 4 hour candle for Forex. On gold, you will not see 5 a.m. rather you will see 6 a.m. So use 6 a.m. if you are trading gold, and 5 a.m. if you are trading Forex pairs. Another mistake that traders make is that they enter without confirmation, and there are like 4 different confirmations before you can take a CRT model, but 3 of them are my favorite, and I will read them out now. The first confirmation is that CRT is a timed setup. It is timed, which makes it absolutely accurate. Okay, it is not 100%, but only using the 5 a.m. or 6 a.m. 4 hour candle is the first confirmation, and the timed purge between 9 a.m. and 10:30 a.m. This is the time where you expect price to take out either the high and the low, and you observe how it closes before you can react to what price is doing. The lower time frame CRT inside a higher time frame CRT is another way of confirming. And the third one, that means, for example, if this CRT is confirmed, this candle closed below this low, when I go back down to the lower time frame, say 15 minutes, and I see another CRT inside this CRT leg, I'll trade it. I will take the trade because it is a high probability confirmation where a CRT forms inside a CRT. That is the third one. Then for the fourth one, it's a key level. Now, if you are trading a 4-hour CRT, you should be looking for your key levels in your 1-day candles. Okay, on the 1-day chart is where you look for the key levels for trading the 4 hours CRT. All right, now let us go down to the chart so that I can show you an illustration of what I mean. But first of all, I think I should show you the trade that I took yesterday on Friday on gold. I will start off by going down to my 4 hours chart so that I can show you how I framed that trade. Okay, so I'll delete this. I can't remember what I was checking when I did that, but this is, where is Friday? So this is Friday 6 a.m. candle right here. So what will I do? I will mark the high. I think I should just dot the lines and increase. Okay, so this is the high and the low of my 6 a.m. candle. Remember, I trade gold. On Forex, it would be 5 p.m. It would be 5 a.m. sorry, but on gold, this is 6 a.m. 4-hour candle. Okay, so what did I do? I waited for price to close here. Okay, you can see my position candle right here. Immediately price started going down with this candle. First thing I did was go down to the 15 minutes chart. So on the 15 minutes chart right here, you can see that price used this candle leg to drop rapidly. Okay, so once this candle dropped right here, I used this, became my new CRT leg that I will wait for price to close below. Okay, I will wait for price to close below this one, and if you check, if I changed these dotted lines, you will see that this candle actually closed, this bearish candle closed outside this candle low. Okay, so once it closed outside, I now had another low, right? So I will now use this leg as my new CRT low. So I will put a dotted line there as well. So the next candle gave us our perfect illustration of a CRT model. Okay, so I waited for this candle to close on the 15 minutes, which is what I have here. Immediately price closed. I think I should remove this position size too so that you can see me clearly. Immediately price closed above this leg here on the 15 minutes, right? Remember, we are now on the 15 minutes. Immediately price closed there, I went down to my 5 minutes chart, and on the 5 minutes chart I saw another CRT leg here, right here, perfect for a reversal CRT. So what I did after this CRT, once price closed above, what I did was to look for an entry above this leg. I will change the color right now. Well, I don't know. Okay, yes, I don't know if you can see this, but this green dotted line is where I made my entry for a long position, and I put my stop loss around here and targeted 50% of the range. Now, how did I get my 50% of the range? My 50% of the range, if I should drop down to the 4 hours, is basically using my Fibonacci tool. It was basically using my Fib tool to mark the high of today down to the low already printed, and I took this level as 50% of my range. So I will go back to my 15 minutes again. Okay, my entry was on 5 minutes, so I will just drop down to 5 minutes again, and I targeted 50% of this range. It was the perfect setup, okay, for a CRT. But as you can see, price did not get to my take profit target. All right, price did not get there, so I closed my position around somewhere here because gold was heavily bearish on Friday. Today is the 14th of February 2026, 14th of March 2026. Sorry, it's March, not February. So that is basically my Friday trade. Okay, now I saw something interesting on the 1-day chart, which I would also like to share with you. Okay, which is an observation of a potential CRT forming for the next week. Okay, so if we see price close above this candle, or price wicks and closes above this candle, then I will be framing a bullish position for gold, right? Remember, this is on the 1-day chart. When I'm trading, I don't use the 1 day to trade actively. I just use it to know my key levels, and these 2 weeks right here, they are my perfect key levels. I think this week has already been tapped into. Sorry, and this one is pending price action impedance, but I hope you just get the idea of what I'm saying, right? I hope you just get the idea of what I'm saying. So another thing that will help you with trading CRT is risk management. Always make sure that you manage your risk. Okay, I don't want this video to be too long, so I'm going to say a few other things and allow you to go back to your chart and backtest it, really, because it is a pattern that repeats itself. Remember that price is fractal, and if you are able to master CRT, you will notice that you will be able to buy and sell prices at key reversal points. Okay, you can be able to time the reversal of candles, which is exactly what trading the CRT strategy does for you. So for a recap, okay, CRT basically deals with identifying a candle range. Okay, identify a candle range, and that candle range is a 4-hour candle, or of a 5 a.m. candle for forex and 6 a.m. candle for commodities like gold. Remember, 4 a.m. candle. You can trade other CRTs, maybe combining your 1-day CRT with a monthly CRT, or combining your 1-hour CRT with a 5 minutes CRT, but for this model I'm only teaching 4 hours CRT candle, and you go down to 15 minutes for an entry. Okay, so wait that 5 a.m. candle to form, wait for it to finish forming before you can then go down to your 15 minutes and look for a CRT to form within the high and the low of these candles. Okay, wait for 15 minutes action on the high or on the low to see what actually plays out. Okay, now the purge is always definitely mostly going to form between 9 a.m. to 10:30 a.m. Remember, my CRT in the example I showed you formed by 12:30 a.m., which was New York lunch time. So I traded 12:30 CRT, which is actually a lower probability CRT, but I just wanted to catch that reversal. Okay, so you can enter on order block. You can enter immediately the 15-minute CRT finishes forming, and you can enter on the 15 minutes. You can enter on the 5 minutes. If you don't see what you're looking for on the 5 minutes, it is allowed to go down to the 3 minutes, 2 minutes, 1 minute time frame, but make sure you are working with what you have on the higher time frame bias. Okay, so this is actually my first video on CRT, and if you have other things that are confusing you, you can drop a comment in the comment section. All right, and remember to backtest this CRT strategy to see if it works for you and the best way to actually use it in your day trading. All right, so please drop your comment in the comment section, like my video, and please subscribe and tell me what you want me to put out next, and I promise I will do that for you and explain everything that you need to know. So until that time, I'll see you guys later in my next video. Happy trading, and I will miss you. Bye.